Hang Seng is down 2% as we speak.
Job market is weakening because of that. Well, guess what? It's right back up. Leisure and hospitality is still trying to claw back the jobs that are lost in the pandemic. Healthcare back strong, 79,000. Government.
They have very clearly said that their exposure is very well within the permitted limits.
I do believe that the Indian growth story is not an Adani growth story, so therefore wrapping the Indian growth story around Adani and their admittedly significant infrastructure spending.
Slightly in the red for the market, the sensex and the nifty down about 0.2%.
The volatility probably would have caught everyone by surprise, especially what happened in the last 2 weeks.
The nifty is now down to levels of 17,700, 150 points gone on the nifty.
This is not a business that can generate 30% margins or 40% margins. You're going to be lucky to get to 6 or 7% margin.
SEBI is asking what are called designated depository participants to reach out to their foreign portfolio investors by the 31st of March 2023.
Government has given its go-ahead to convert AGR dues owed by Vodafone Idea to the government to the tune of 16,133 crore rupees into equity.
Then 100 points cut at the moment, 0.63% down.
Hello and welcome to a fresh new edition of Closing Bell. We are coming to you live from the CNBC-TV18 Motilal studios. And over the next 60 minutes, we will run you down to the market closing. I'm Prashant. With me, of course, Reema from the studios. And Surabhi is now joining us from the newsroom floor. We're a man down, Reema, right? Nigel is out of commission, but she'll be back soon. Guys, hi, good afternoon. It's looking a little sideways from the morning. And I think it's lackluster, right? I mean, not very much going on. 0.5, 0.6% cut. But there is, of course, also the occasional bounce, which I think emerges. We're at about 17,750 as we speak. I mean, 10 minutes back, it looked like we'll have one of those sharp bounces, but not to be. 30 points has been given back in the last, 5 minutes or so. So that's the index for you at this point in time. Market breadth is a little negative. It was deeply negative on, it was actually more pronouncedly negative on Friday. The Nifty was up sharply and the market breadth looked completely off. Today, again, the breadth is negative, but not by that big a margin or anything. Some 300 stocks separate advances to declines right now. The other thing, of course, is the Adani story, right? I mean, the latest is that, and we'll have more details on this, Adani promoters are releasing sort of pledged shares across group companies. We know for a fact, and this is a release, official release, across 3 group companies, they are in the process of releasing a significant portion of pledge, which should be seen positively. Stocks have bounced, of course, from the day's low. On the Nifty, in terms of levels, the 20-day at almost 17,900, and then about 100 points higher is the 18,000 on mark. These are broad levels. Which is basically the point where the Nifty will, if it rises more, meet the downward sloping trend line from the all-time highs of 18,887. So 17,900, 18,000, I mean, those are the rough numbers to keep in mind on the way up, where perhaps there should be some selling pressure. On the way down, it's the budget day low, 17,353. I think we've been highlighting that for a while now. Reema, hi.
Hi, afternoon. So on the Nifty, we're currently perched at 17,750, down 100 points. The sensex is lower by about 350 points. So the benchmark indices are down close to about 0.5%. But stripped of that, the broader markets is actually doing pretty well. The mid-cap index is up 0.8%, the small-cap index is higher, and the advanced decline ratio is in favor of the gaining side. So we've got about 1,600 stocks in the green for 1,300 stocks in the red. So the broader markets are doing pretty well. Asia today has ended on the back foot. So Hang Seng was down 2.2%. The Chinese markets were down close to about 1%. Perhaps the US-China spat over the balloon may have soured the sentiment to some extent in the global markets. So Hang Seng, Shanghai, Taiwanese, Korean markets across the board, Asia has ended mildly lower. On the Adani Group stocks, the F&O Adani stocks, so whether it's Adani Ports or Adani Enterprises, they've been stable for the second day in a row. Even in Friday's trade, Adani Enterprises had ended absolutely flat. And today as well, it's just down close to about 1%. And buying has emerged in Adani Ports. The low that Adani Ports hit in Friday was sub 400 rupees. And now the stock price has climbed to levels of 526. That said, the cash stocks are still lower, in a lower circle. circuit. So that's Adani Green, Adani Transmission. But at least in the F&O stocks, Adani Ports, Adani Enterprises, you are seeing some stability emerge for the second day in a row. The action is all in the broader markets. We'll talk more about IndusInd Bank, Vodafone Idea, Indus Stars. So that's a pocket which is doing pretty well. M&M Financial numbers are good. There's a management change. Paytm has now turned cash EBITDA positive 3 quarters ahead of what they were anticipating. So that's another stock which is higher in trade. So Surbhi, there's plenty happening in the broader markets today. What are you watching?
Absolutely. For starters, Reema, I was going to talk about IT and metals, but I think the news that's flashing at the bottom of our screen is even more interesting. We'll try and get our colleague Sapna in just a bit on this. Very, very interesting. Just to kind of, update you on all the flashes there. Hindustan Zinc was to buy out Vedanta International's global assets, global zinc assets. And they would have spent almost $3 billion to do that. The government, as we know, is a very significant shareholder in Hindustan Zinc, and the government is saying, no, we don't think so. In fact, what Sapna seems to be picking up is that the government had put on record its dissent on this matter. Despite this, Hindustan Zinc went ahead and made an exchange filing. This is turning out to be very interesting. The stock right now, Hindustan Zinc, has started reacting positively. I think it's very, very simple. Otherwise, there's this huge chunk of money. The valuation of the deal was close to $3 billion. That would have moved out of Hindustan Zinc's books onto the parent, that's Vedanta. Let's see how this plays out, but the government seems to be saying that they will put forward their dissent once again in the board meeting. So that's a story that's breaking right now. But beyond that, since we're talking metals, actually, that is one of the weakest pockets of the market. Most of those stocks, global-facing stocks, basically, they've been taking the market down. And we know why. That jobs report has really sort of caused a fair amount of flutter. The rise in global bond yields, the dollar looking a little more firm right now. So global risk-off is, of course, playing its part in India, along with all the other local developments here. So that's what I've been looking out for. But Prashant, toss it back to you right now. Let's talk about all that we've lined up on the show, and there's plenty.
Yeah, we will, Surbhi. But this is a big, actually, this is a huge story, this Hindustan Zinc Vedanta business. And we'll have Sapna join us in just a bit, Surbhi. This is obviously straightforward negative for Vedanta. There was a lot of hand-wringing and about this when this transaction actually went through. Many looked at it. Of course, if you were a Vedanta shareholder, you were happy when this was announced. But if you were not, and if you were a Hindustan Zinc shareholder when this was announced, you were extremely unhappy. And if you were a neutral party, you were just watching this entire thing with some amount of amazement. But now I think with the government weighing in and having a firm view on this in terms of trying to oppose it, I think this is pretty significant. As I said, we'll have Sapna with us in just a bit from now to take us through more on this story in terms of what the government's logic is here. Now, lots to talk about. Divi's, of course, is once again, Divi's Laboratories, the stock is on our radar once again. Sold off. Actually completely crashed on Friday. It's down another 4 today. Ekta is standing by. We'll go to her in just a bit to tell us what else is happening there. Reema will put the focus on Vodafone Idea. The stock has been buzzing, of course, and the news flow we've been discussing since the morning. Deepak Shenoy and Sudeep Bandyopadhyay are our fundamental guests on the show, and we'll talk markets with them. And of course, our alpha man of the day is Harish Krishnan of Kotak Mahindra Asset Management Company. So that's what's lined up here over the next 60 minutes or so. We've got a couple of previews lined up as well, which we'll get to in just a bit from now. Let's begin the show with a quick view from Mitesh Thakur, who's joining in with a sense on how the market is set up. Mitesh, hi, good afternoon. Good to have you with us here. How are things looking now? We are down firmly, pretty much the same picture the last time we spoke.
That's right, Prashant. Good afternoon. It's not actually moved much. It's moved down and then, turned sideways. If you look at the last 2 hours of data, hardly any movement has taken place. So while the good thing is that it's not breaking below 17,700 conclusively, the bad thing is that it's not even trying to move up. But we are still trading with long bias, given the fact that a lot of stocks are showing promising patterns on the daily and the intraday charts. And I think, that's where momentum could be in case the market doesn't fall much. These stocks should do much better than the rest of the pack and possibly record some gains. So I have a buy on Siemens. It's done very well to move nearly at the day's high, and would recommend a buy here with the stop just below levels of 30.43 and a target of around 31.50 on the upside can be looked at. The other one which is reversing is RBL Bank. The stock had outperformed for quite some time in the month of January, late December and early January, and then we saw a correction. It's now reversing after completing the correction, so that's a buy as well. Keep a stop at about 158. Look for targets of 175 here.
Okay, thank you very much for that. Let's talk a bit about Divi's Laboratory. The stock crashed on Friday after the numbers came in much lower than street anticipation. There was a big margin miss, and it's followed it up with another bout of selling, 4% lower now. Ekta standing by to tell us what went wrong for Divi's Laboratory in this quarter and what the outlook is. Ekta.
Divi's Labs margins were the key disappointment in Q3. The company, which was once lauded for its margins sustaining at over 40%, reported margins which were at a historical low of 23.9%, led by factors such as cost inflation and pricing pressure this quarter. Also saw the impact of COVID-19, opportunities such as Molnupiravir depleting. Estimates are Divi's made as little as $5 million of sales from Molnupiravir versus $130 million a year ago and around $40 million just last quarter. And besides COVID-19 opportunities depleting, the company was also impacted by the underlying profitability in the generic API business being impacted due to price pressure in the US markets. Some products, in fact, faced anywhere between 5 to 10% price erosion. Brokerages were clearly disappointed with this quarter, with target prices reduced and EPS estimates cut anywhere from over 10% for FY23 to over 15% going into FY25. The street fears earnings to be impacted more than earlier due to a high base in the custom synthesis segment, price pressure in the US, and an overall reset in margin expectations. Lastly, what could help turn the stock around? A few triggers include the Kakinada capex for the company coming on stream, for which the company did get a green signal to resume construction, recovery in margins, price pressure in the US, and some opportunities coming through in other segments such as contrast media as well as fast-track projects. And valuations. Once the darling of investors, the stock has already lost over 40% from its 52-week high and is now trading at around 35 times FY24 PE, which is a far cry from the peak of over 70 times, but still expensive, according to some.
All right, Ekta, thanks very much. That's a comprehensive take on what's gone wrong with Divi's. But let's get back to the story which was flashing at the bottom of the screen, which is flashing at the bottom of the screen. The government is going to oppose Hindustan Zinc's buyout of Vedanta's global zinc asset. Sapna is joining in. She's getting us this exclusive story. Sapna, thanks for that. Afternoon. Two things. One, why are they opposing this? And two, can they oppose it with their holding in the company? Go on.
Well, what we're given to understand very clearly from government sources is that I think one round of objections already happened, at the board level itself when this decision was taken by the independent directors of the Vedanta board, and of course the government directors here at our end, at North Block's end, had made this opposition. Despite the objection that was raised, the exchange filing did happen, which indicated that almost $3 billion worth of funds will flow out from HZL for the buyout of these international zinc assets of Vedanta, which are located, I think, in Namibia and maybe South Africa, some of those countries. So despite that, this has happened, and now we are given to understand that in the AGM, the government will be very, very definite and very clear that this cannot actually go through. Also, maybe in AGMs, it's a minority shareholders which have an upper hand, and so to speak, I think this proposal is something that government will not only just oppose tooth and nail, but they will make sure that it doesn't go through. That's a clear sense that we have been given. We have also been indicated that I think on two accounts there have been violations. One, of course, the rights of minority shareholders, like 29.5% is what GOI holds in HZL. And despite the objections raised, the exchange filing happened. And, as a fallout also, probably it's also a contravention of the corporate governance norms. So on both these accounts, as of now, the government's view is extremely clear. Now, in all of this, what really happens is that sometime before March end, the government had planned, for a residual stake sale in HZL out of the 29.5% odd that they hold. There was a definite plan for an OFS, maybe 5%, maybe 8%, maybe 10%, that had not been announced. But now with this new development, I think that is going to be on hold till there is clarity on this front. You see almost $3 billion are flowing out from HZL. That's a big deal. Of course, that's a separate parallel corporate development, but it will have an impact on the government's plans to sell for this stake in HZL, and that's why also this issue becomes important.
Okay, thank you very much for that. It's a big negative for Vedanta, which was hoping that the $3 billion of cash will come through, which will help the company de-lever. I'm given to understand that I think Vedanta has close to about $2 billion of repayments in Q1 of FY24, and had the money from HZL come through, it would have helped them de-lever quite quickly.
Even the other thing Sapna said is that they had sort of presented objections, but despite that, Vedanta went ahead and sort of announced that they're going to do it. And then Sapna also alluded to sort of breach of corporate governance norms, etc. So this could actually, I mean, obviously don't want to speculate, but this is the government of India we're talking about, and definitely not good news for Vedanta and what they were planning to do here. Go on.
Okay, let's get in Deepak Shenoy of Capital Mind to get in some comments on this. Deepak, your first thoughts on what's brewing at Vedanta Hindustan Zinc?
No positions here, but I think the right thing to have done to transfer the cash to Vedanta would have been to give a dividend, which would have then could be used by Vedanta and all other shareholders of Hindustan Zinc. To take this out by saying we have some subsidiaries in South Africa and we'll transfer that to Hindustan Zinc and take all the money for themselves is not really the right thing to do. If I were a shareholder of Hindustan Zinc, I would feel that the promoter is benefiting at my expense. But I personally feel this is not a great transaction, especially in the realms of corporate governance with the volumes. I mean, if it was a much smaller number like 200 million or something like that, it would have been more palatable. But at this point, to take 3 billion, 20,000+ crores out just to one promoter for assets which have, the valuation of that assets also something that I don't feel is as valuable as $3 billion. I don't think this is a great transaction. So I'm happy the government's objecting. They have 30%. Hopefully they can act in time to kind of protect, their own shareholding and the cash that they see in the business itself. So I think beyond that, it'll be a boardroom battle, perhaps a courtroom battle as well at some point. But I think, somebody does need to oppose this transaction.
No, this is interesting, and we'll have more on this. Deepak, stay with us. We'll take a break here. But some exciting news. The most coveted leadership awards are back. CNBC-TV18 is honoring the visionaries behind outstanding businesses. Catch the most influential, credible, powerful IBLA jury this Wednesday, 8th February, right here on CNBC-TV18. We'll take that break. We are back. More on markets in just a bit. Welcome back. Now, the union government is the largest shareholder in Vodafone Idea. The government owns just over 33% of the telecom companies after converting adjusted gross revenue dues worth more than 16,000 crore rupees into equity. The Vodafone Idea stock, of course, is rallying even as we speak. However, analysts say while the move is a near-term positive, Vodafone Idea needs billions of dollars more to arrest the loss of market share. Rima is here and she's walked across to the big wall to get us the details. Rima, over to you.
Thanks so much for that. So finally, some good news for Vodafone Idea. After over a year, the government has given the go-ahead to convert 16,000 crore of AGR dues into equity. So let's start off by telling you what this means for all the individual players and stakeholders. Now, for Vodafone Idea, this is a near-term positive, a big sentiment booster. The government now appears to be committed to the future of Vodafone Idea, and now with an implicit sovereign backing, or a guarantee, it can now, Vodafone Idea can go ahead to the banks, raise some money, or look to refinance their loans. Dues to vendors can be repaid, like Indus Towers or even ATC. Remember Vodafone Idea's proposal to issue 1,600 crore of debentures to tower company ATC Telecom was contingent on government approval. Now that the government approval has come through, ATC can also be repaid. Remember, no fresh money is being infused into Vodafone Idea, but as BofA says, it would free up some cash flows for Vodafone Idea. This, coupled with potential capital injection by the promoter, the timing of which is unknown, should help Vodafone Idea clear the pending dues of tower companies, vendors, and also invest in 5G. Now for Indus Towers as well, this is a very big positive. Indus Towers, remember, has been writing down receivables from Vodafone Idea for the last 3 quarters. In fact, because of the receivable write-down last quarter, Indus Towers had posted its maiden loss. But now the expectation is that Vodafone Idea will be able to repay Indus Towers, and therefore the receivable risk from Vodafone Idea reduces, which is why Indus Towers has been rallying in trade. Now for Bharti Airtel and Reliance Jio, just in the near term, this could be a bit of a negative. Because as BofA says, the current move drastically reduces any risk of Vodafone Idea going into NCLT, and the pace of incremental subscriber gain from Vodafone Idea, which was going to Bharti and Jio, would reduce. In case anyone was pricing in a duopoly for Bharti and Jio, that unlikely is going to happen now. That said, the road ahead for Vodafone Idea isn't easy. Again, I'm picking up the report from Bank of America, and they're saying that according to their checks and in discussions with vendors and tower companies, indicates that Vodafone Idea is significantly underinvested in fiber, 5G, and core telecom infrastructure. Vodafone Idea would at least require $6 to $8 billion investment to narrow the gap. This means that the company will need to raise external funding to start 5G. One from the promoters and also from external investors to kickstart its 5G plans, because peers are racing ahead with the 5G rollout. And finally, the elephant in the room when it comes to telecom companies are tariff hikes. Tariffs will be needed for a long-term sustainable pickup in cash flows for Vodafone Idea.
All right, Rima, thanks very much for putting that in perspective for us. Deepa, good afternoon. Surabhi here. Let me take this question to you. I guess Vodafone Idea, a lot remains to be seen. Rima highlighted a lot of these points about how do they get really back in the market. My question is more about Indus Towers, really. The stock has really gone through the motions. It's halved from its peak levels back in September of 21. How much of a cushion does this provide? And would you have any interest in Indus or even Vodafone Idea for that matter?
No interest will be. In fact, I think Rima put it well. There's an uphill task ahead for them. Despite this, I mean, the problem with Indus Towers is, I mean, it has a receivable from Vodafone Idea, and if they've managed to let this go 1 quarter down, then they've staved off the issue hit for now. But the problem of Vodafone's balance sheet still remains. They're 75,000 crores in terms of negative equity. That means their equity is gone, and they have accumulated losses effectively of another 75,000 crores. Technically, this means somebody has to infuse 75,000 crores of equity for it to be just a going concern. Beyond that, they're going to need more equity to support debt and so on. What the government has done is convert 16,000 crores. So they still have about 60,000 crores of negative equity. I don't see anyone putting that kind of negative equity in added up. So their ability to refinance loans, even after this, the fact that they will have 198,000 crores plus of AGR plus other dues that are payable over a period of time. I think over 10-15,000 crores per year will accumulate just on that. They have 20,000 crores a year of depreciation, and their operational cash flows are less than 20,000 crores. So they're going to be net negative despite this conversion of dues to shares, and that was just interest cost to shares by a very large margin. So Vodafone Idea again is going to come back into this problem if somebody does not invest $10 billion into this company in the next year or so. And I don't see that happening. So I think Indus Towers, and again, we have no interest in either of these companies, has, I think, a problem going forward, if not now. Now they may be able to heave a sigh of relief and hope that some payments come through. But I think this is still an issue of survivability for Vodafone. And looking at the way they're losing subscribers, even the operational cash flows may not be that attractive. So, I think it's just kicking the can down the road and a temporary set of excitement for the investors in Idea.
Another beneficiary of this or of today's move is IndusInd Bank. Vodafone Idea, Vodafone Idea's dues to IndusInd Bank stand at close to about 3,500 crore rupees, and that's about 1.3% of its book. And that's the reason why IndusInd Bank is also fairly excited in trade. Deepak, you don't have interest in Vodafone Idea or Indus Stars, and you don't believe this news is a long-term positive. It's just kicking the can down the road in terms of troubles. What about M&M Financial? There is a new management. There's a management change which has been announced. The numbers look fairly attractive. The stock has surged 8.5%. Is that something which interests you?
Yeah, I mean, it's actually since the results, I think the last time we looked at it was when there was this issue with the RBI, asking it to do certain things like that. And then we were like, okay, let's avoid until the numbers start to come back. All NBFC numbers are starting to look attractive this quarter. I think so does M&M Financial. There were some issues with the program where they were lending cars to drivers on Uber, and there was, some NPAs that were a result of that. I don't know how that has progressed, but overall, I think it's a very good business per se. And NBFCs right now are able to grow at a substantial pace. We're seeing both bank lending to NBFCs and NBFC credit growth also moving at a scorching pace. So I believe for this year it might be attractive. Again, I don't have any specific things for M&M Finance per se. But I think the whole NBFC space is attractive right now. We have some investments, but looking forward to some more numbers before we commit.
Okay, all right. Deepak, we'll leave it there. Hope for a longer chat, but we've got stories coming in thick and fast. It's a busy day as always. Thanks indeed for joining us with all of that. Hope to have you back soon. Harish Krishnan is also joining us. He's Executive Vice President and Senior Fund Manager, Equities at Kotak Asset Management Company. Harish, it's always a pleasure having you with us here on the program. Thank you very much. I just want to start with a broader question to you, Harish, on the markets themselves. What are the sort of top 2 or 3 big kind of dominating drivers for markets from here out, Harish? And I know you look at valuations very, very closely, and I think you were a little uncomfortable about how valuations, especially in some sectors like consumers, etc., were. So tell us, what's your view now?
So Prashant, clearly the view is that the last 15 odd months has been only about macro. So view number 1, I think, is that macro is going to matter less and less, or an edge related to macro is going to matter less and less. And it's going to be more about micro. And there clearly there are some opportunities of some companies, weathering the storm much better than the other. From a big picture point of view, the view number 2 or the bigger trend that we see is clearly that material costs are starting to come off. We saw in the September quarter one of the lowest margins, both on gross margins and EBITDA margins for the broader market. And clearly it was led by inventory losses due to the volatility in commodity, and also the fact that commodity prices had gone up. The WPI was significantly higher than CPI. We have now seen a convergence of WPI and CPI in India, which means that going forward, we do think that margins will be the bigger driver going ahead, rather than just top-line led growth happening in India. View number 3, I think that the rate of change globally is improving much faster than in India. And therefore, we do think that, it did seem that maybe about 6 months back, that it was all doomsday scenarios being painted across the world, be it in Europe, be it in China or in US, where there, most people were predicting a short recession. It does look like things are improved quite dramatically in all of these 3 areas. And therefore, the rate of change incrementally is looking much better globally than in India. So I think these would be the 3 broad views in which we shape our portfolios. Coming to your query on valuations, we do think that there has been some moderation in valuations. It still is, I wouldn't say it's nosebleed at most places, but it still is, fair value plus in aggregate. There are some pockets which have opened up in terms of a slight reduction or slight moderation in valuation, and that is what we would want to use to kind of allocate at this point of time from a portfolio point of view.
Harish, hi, good afternoon. Surabhi here. Good to be chatting with you. So, in light of what you just said, sort of slice it up for us in terms of sectors where you see that comfort. For instance, IT could be one such sector, but then do you also see commensurate growth coming in over the next couple of quarters? Are you looking for value plays then?
Right. Given that I said that the rate of change globally is on the betterment, clearly IT is something which we have at least cut our underweights. We've gone neutral. Clearly, valuations are still not very comforting, given the fact that generally, they tend to be significantly below from a trough point of view. So in that context, we've cut our underweights. We are neutral now. But we do see opportunities in, for example, energy using sectors, so for example, gas utilities, or it could be the cement pack, home building materials. Over there, we have a lot more comfort on both in terms of valuations, as well as the fact that, the gross margin compression that we've seen for a lot of them is behind us, and we are likely to see some kind of operating leverage. The third aspect is clearly in terms of auto and auto ancillaries, and to a certain extent on the industrial side. Over there, we do still get a sense that, consumption is still in the back foot, and infra manufacturing is still, I would say, reasonably in much better shape. And so these are the 3-4 key areas where, we are deploying incremental capital in as far as our portfolios are concerned.
Got that. I remember last time, Harish, you were a bit worried about the banking sector. This was when we had spoken about a month back. Now, the banking numbers have been rock solid across the board, PSUs and private. Do you continue to maintain your anxious stance on banking? And if yes, why?
So even at that time, we did allude to the fact that it was a Goldilocks moment for banking, with all the three vectors, in the best of shape, be it credit growth, be it pre-provision operating profits, or in terms of NIMs. And I think the worry clearly is that at the rate of change from here would be, at least one or two of these dimensions could slip up. Again, we are not saying that it's going to go back to the worrying prints that we saw pre-COVID. No way. I think it's too early for us to be negative on that count. But from a point wherein banks did all the heavy lifting in terms of earnings, they had a superb, stellar set of numbers and prints. We think possibly another quarter could be where those prints can sustain, and beyond that, it'll start, moderating a bit. Having said that, bank stocks or financials have corrected, not necessarily because of the earnings, but because of the other reasons, in terms of exposures, etc. And therefore, it does provide us an opportunity to cut back some of that underweight stance that we have in certain pockets of financials, and that's what we are currently doing.
Okay, so you expect some chinks in the armor to show up perhaps in Q1 FY24. Next quarter could still look good for banks. Thank you very much, Harish, for joining in. Need to slip into a very short break. As we do that, we'll get you a check on what dealing rooms are saying in our segment D Street Chatter. We'll also tell you what you can buy today to sell tomorrow. Calls from our technical experts.
Okay, welcome back. I mean, the market's still there, some 80 points lower on the Nifty, 86 actually, 17,767 is where the index is trading at. Pull up Adani Ports. I mean, that is the one which stands out with a 10% gain, 549 on Adani Ports, and that's a big surge which we are seeing. Stocks back at 550 rupee levels, which is the day's high. Now, the latest, of course, is news which came through, and this is official from the company, that some of the pledged shares in group companies are going to be released by prepayment. Vivek is here to detail that out for us. Vivek, over to you.
Well, that's absolutely right. So, in a press release that came in from the company, some very important details coming in, stating that the Adani Group promoters have actually posted almost $1.1 billion in order to reduce the percentage of pledged holdings in 3 of their group companies, and this is going to be ahead of the expected maturity, that is September 2024. So now, 3 group companies will see the percentage of pledged shareholding by the promoters come down. And when you're talking about Adani Transmission, the promoters are looking to reduce the pledge by close to 1.4%. In Adani Green, almost by 3%. And very interestingly, in Adani Ports by 12%. Now, what is more interesting is the fact that, especially if you're talking about Adani Ports, where they're looking to reduce their, the proportion of pledged shareholding by 12%, the total percentage of promoter holding pledged at the end of the December quarter was only close to around 17.3%. So a significant chunk of the pledged shareholding is being reduced. When it comes to Adani Green Energy, 3% out of the 4.36%, and when it comes to Adani Transmission, 1.4% of the total 6.6% pledge will be reduced.
All right, that's pretty significant, right? I mean, 12 out of the 17.3% number is substantial, significant. Vivek, thank you very much. That brings clarity on this particular story. That is the operative, those are the operative numbers that we were talking about. Well, more news flow with regards to Adani, this time not so sort of positive in that sense. Uttar Pradesh's power utility has cancelled Adani Group's bid to supply smart meters. Abhimanyu is joining in with the news and the context to it. Abhimanyu, over to you.
Well, the chairman of the All India Power Engineers Federation has told CNBC-TV18 that UP's power utility, Madhyanchal Vidyut Vitran Nigam, had cancelled Adani Group's bid to supply smart meters on this 4th of February. Also, the price of rupees 10,000 per smart meter was being deemed as higher, according to the Power Engineers Federation, compared to the REC's standard bidding guideline of rupees 6,000 per smart meter. Adani Group has also emerged as the lowest bidder in the bids to supply smart meters by Agra and Meerut Discoms. The All India Power Engineers Federation told CNBC-TV18 that the Vidyut Karamchari Sanyukt Sangharsh Samiti had sought cancellation of bids, citing overpricing and alleged cartelization by the companies involved. They had claimed that all the 4 bidders in this particular case, namely Adani Group, GMR, L&T and IntelliSmart Infra, do not manufacture smart meters, and hence they had opposed this earlier move by the government, by the UP government undertaking, which is the Discom Madhyanchal Vidyut Vitran Nigam, which has now cancelled the bid. It remains to be seen what is going to be the further course of action from the side of the Uttar Pradesh government, since 5 Discoms from the state of Uttar Pradesh had issued separate tenders to procure 2.5 crore smart meters under the rupees 25,000 crore project. Clearly, the plan of action from the UP government is yet to be known what is going to take place in future, but for now, the Power Engineers Federation is opposing these bids and is opposing the entry of the private sector.
Okay, got that, Abhimanyu. Thanks very much for giving us all the news flow surrounding Adani Power and, of course, their bid for those smart meters. With that, let's get back to the market, which is still down about 0.5% on the benchmark indices. Mid-caps have been doing better. So let's find out what the chatter is all about today. Nimesh is right here with us on D Street Chatter. Nimesh, I know Adani is always part of the chatter, but what else? What's the mood like out there today?
Survi, well, the index is down 0.5%, as you rightly pointed out, but the breadth is positive. That's something like a bit of a relief for a lot of investors and traders as well. And that, I guess, is largely because if you saw what happened on Thursday, Friday, a lot of the trading, got cleaned out, because of margin calls getting triggered and all. Not only Adani Group stocks, but outside the Adani Group stocks as well. So technically, the market is little light as far as the trading activity is concerned.
And today, the moment the buying comes in the mid caps, it's typically seen as a slightly positive sign. Some sentiment positive.
I would say it's more of lack of selling than big buying. That's the way to explain the kind of relief you're seeing in the broader markets in today's trade. In terms of FI activity, again, a mixed view of trade, so to speak. A bit of selling in the technology names after a big up move that we saw in the last many days. And metals, for a change, is under pressure today, largely on concerns that the China reopening is not going to add too much to the volumes, and hence that sector is under pressure today. Technically, 17,800, which was been seen as a big support, is now that's a big resistance on the upside. So that's one level to watch as we move ahead. Suppose if you get out of that level of 17,800. The next level is 18,100, 18,200 on the Nifty. So that's been talked about. But the key message is one, there is lack of selling from the larger institutions, and B, the volumes are on the lower side, but there is a bit of relief rally in the broader markets because most of the trader interest has been cleaned out in the last week.
That's always a good sign. I mean, it's a good starting point. At least we don't know where it leads to, but the fact that there's buying some sign of life in mid caps is good. So since the broader market is doing pretty okay today, stocks, Nimesh?
So in terms of chatter, the first stock on my list today is Shriram Finance, the merged entity now. Again, we saw a couple of weeks back a big block wherein a private equity sold out. Now the buzz is that there's going to be a large block deal again soon in Shriram Finance. So that's one stock to track going forward. The second stock is Dynamics Technologies. Again, a small stock. I mean, not a small stock, so to speak, but not a stock where there's a lot of volumes. I understand there's going to be a fundraising via preferential issue very soon. So the fundraising and the investors participating will be interesting as far as Dynamics Technology is concerned. And the last stock is RBL. Within the private banks, that stock is a big up move today and good volumes as well. I believe some bit of HNI action is back in this particular stock. And there is a chatter or anticipation, so to speak, of a corporate development RBL very soon. And hence, that stock is buzzing in trade today.
Okay, all right. Thanks very much for all the chatter, Nimesh. Guys, back to you.
All right, interesting list as always, guys. Nimesh, thanks very much for that. Mitesh is with us to tell us what to buy or sell today for a reverse trade tomorrow. There's, 11 minutes to go for market closing, Mitesh. What do you have?
And again, two buy calls, surprisingly, I think the breadth is also looking very encouraging and trades are also emerging more stronger on the buy side. So I have Zydus Life as a BTST with a stop at 465 for targets of around 485. And one stock which is giving signs of correction being over and the start of a fresh uptrend is TVS Motors. That's a BTST with a stop at 1044 for targets of 1075.80.
Okay, got that, Mitesh. Thanks very much for the calls. With that, let's go back to a couple of the fundamental points in the market. Sudeep Bandyopadhyay, Group Chairman of IndiTrade Capital, is with us on this leg of the show. Sudeep, great to have you on the show as always. I want to draw your attention to Paytm. The stock has been doing well. We've been talking about, mid caps finding some favor today. What did you make of Paytm, at least at the EBITDA level, managing to come back in the black earlier than their own guidance? I mean, the stock is still a far cry from the listing price. I think it was 1950, if I remember correctly. That's where the stock listed. I mean, we're miles off that. But your thoughts and whether at all you'd start sort of looking at it a little more favorably?
Well, Surabhi, I think it's a commendable effort. Definitely, one has to acknowledge the fact that they have become EBITDA positive much before what they had announced. But that doesn't take away the fact that I think the way the business has moved and the way the numbers have moved, I think there is still not any no certainty about the future revenue stream. Which part of the business will enable them to really take the company forward in the near future, so that the kind of valuation at which it was listed gets justified. I think that hasn't come out. I'm not unnecessarily criticizing the management or anything like that, but the reality is the business today which Paytm has doesn't deserve a multiple which can even remotely take them to their listing price. So I think that's a big gap. Now, if somebody is asking whether it's at 560, 570 levels, it is, I think, is a good buy or something like that. There again, I'll be a bit cautious. I think the core business hasn't yet started giving some sense that it's going to be sticky. B, it's going to be continuous revenue earner. The cost cutting and other measures have definitely led to EBITDA positive results, but distribution of loans and other distribution activity doesn't get you a multiple which can justify this kind of valuation. So I'll be cautious. Definitely a positive development as far as the company is concerned, but considering the valuation even now, I'll be cautious.
Sudeep, hi. Buying is coming in a couple of these pharma names. So Sun Pharma, pull that up. The stock is trimming its losses. Cipla is now back in the green. That's up close to about 1% odd. Apollo Hospitals, again in the healthcare space, that's higher by close to about 2% odd. So many of these pharma names have come in for a fair amount of buying. But the stock of the day clearly has been Adani Ports, 10% higher today. On Friday, the stock was up close to about 7 to 8%. The recent low hit last week was 395, and now Adani Ports is almost at 550. That's the extent of the up move in just a matter of a few days. Get into a break. We'll come back with more market talk. Stay tuned. Welcome back. As CNBC-TV18 highlighted earlier, that there are going to be roadblocks. There is government opposition for Vedanta's planned sale of its zinc international assets to Hindustan Zinc. Vedanta's stock price has tumbled close to about 2.5% to 3%. Sudeep, any particular thoughts on this evolving story? Do you see more downside in Vedanta?
Absolutely. There will be more cuts as far as Vedanta is concerned. This is something which would have given them close to 3 billion of cash, which would have helped them in liquidating a lot of their liabilities. And that's what the strategy was as far as Vedanta is concerned. Now with the government firmly putting their foot down, this strategy is in trouble, and it's not going to get resolved very soon. So yes, Vedanta will see some more cuts.
We'll see some more cuts. Sudeep, it's a pleasure having you with us here. Thank you very much. Just sort of running into market closing, so short conversation today. Let me just quickly wrap up the day with the sort of top gainers on the Nifty and the top losers on the Nifty. I'll start there. So Adani Ports, of course, stands out with a 9% pop. It's by far the big gainer. Then you have IndusInd Bank, which ends about 2.5% higher. And then there is BPCL, which ends about 2.25% higher as well. Actually, even on the Nifty, more losers than gainers. So the big losers on the Nifty are Divi's, which we highlighted. It's down just under 4%. JSW Steel lost about 3%. Hindalco was down about 3%. Tata Steel, Infosys and Kotak are in the 2% zone in terms of cuts that we saw. And Rima, I think for the broader market as well, it was more losers than as compared to gainers.
Absolutely. The mid-cap index was up close to about 1%. The advanced decline ratio in favor of the gaining side. Paytm, that was one of the big movers. Along with that, M&M Financial, management change, numbers strong. Paytm getting cash flow positive ahead of its guidance by nearly 3/4. So that was up and about in trade. On the losing side, Vedanta was down 2.7%. After the government is now creating some roadblocks, they may not be able to get that $3 billion by the sale of the international zinc assets. So Vedanta was a bit subdued in trade. Interglobe Aviation reported, very strong numbers, but the stock was still down close to about 1.5% to odd%. Vodafone Idea, Indus Stars. These were the two standout performances today. Vodafone Idea 21% higher, Indus Stars up 13%, and Surabhi on the way down. A couple of the other Adani Group stocks in the cash market, Adani Power, Transmission Green, still struggling a bit.
Oh yeah, absolutely. I just want to add one more stock, PNG Health. What a move, 14% up. So if Divi's has sort of crashed 14-15% in the last two trading sessions, PNG is on the other side of the screen. From, of course, different spaces, but nonetheless, we're talking about mid-cap action, and that stock did really well as well. Overall, the mid-cap index is going home with a gain of 1%. So smart performance compared to the rest of the market. Well, Rima, I guess back to you. One would perhaps say that not too bad a performance given the weak global cues that we woke up to.
Absolutely. And there was also less volatility, right? Whatever volatility we had was only in the first 1 hour of trade, and thereafter it was, a pretty flat line on the Nifty. By the end of it, closing exactly around that 17,750 mark, a cut of close to about 0.5% on the benchmark indices. But on the mid-cap index, there was buying. The advanced decline ratio looking good, and there goes the closing bell. But we've got so much to track. Even post-market hours, numbers will be coming out from Tata Steel, LIC Housing. So keep it with CNBC-TV18. On the other side of the short break in Indianomics, an exclusive conversation lined up with Aswad Damodaran of NYU Stern School of Business on the Adani Group valuation.